You are listening to Charting Wealth's comprehensive review and forecast for the week beginning Monday, the 23rd of April, 2018. We see Friday being a big down day for the market. Everything down on Friday. The S&P 500, the Qs, gold, the Qs NASDAQ 100, of course, gold and 20-year bonds. And don't forget, thank you all for your purchases, pre-ordering our book, Charting Your Way to Wealth. We so appreciate that. Also, don't forget, we have our trader journals available. We talk about how important it is to track what you do on a daily basis, the movements in the market on the weekly, comprehensive review and forecast, the daily charts, in addition to your practice trades that will supercharge your training. And we have those journals available for you. And of course, we have instructions at the website and at our YouTube channel on how to use those worksheets, both the daily market, the weekly market worksheet, and the trade worksheet. And of course, our book is out and available. Well, for pre-ordering, we'll be getting it out to everybody who pre-orders it first in the next week or so. So again, working hard on that, and appreciate everyone who's already ordered it. And I'm going to autograph all of those with a nice little note to all our pre-order folks. We so appreciate it. It's the first thing that we've actually done here in any way to help recoup some of the cost and investments we've put in this channel all these years for you. So let's jump into these charts. What do we see going on? The S&P 500, we ended with a green open box candle, which again connotates typically nice, strong movement in the market. It is the first green open box candle we've seen since the week ending on the 16th of March. We had that move up and then the three crows, the down movement on the 23rd, the 29th of March, those weeks ending then, and ending the 6th of April. Then we had a doji week ending Friday the 13th, and this has been an up week. Now, it wasn't enough up movement to change the direction of the price percent oscillator, derivative oscillator, losing downward momentum. So again, still in a confirmed down move, even with all that up movement. And of course, remember, everything being equal, the market tends to move in the direction of the largest chart, and it's still the weekly. We see the two-day crossed over the first of this past week on Monday the 16th. That two-day candle was a strong enough up movement to actually rotate over the trend line. It took off going up. We had the weekly vertical, the two-day vertical crossover going up, followed by another strong up candle ending Wednesday. But this latest candle ending Friday, latest two-day candle, is a red doji, means indecision, tending down. And of course, it has, let's see, make sure our trend line's drawn right on the two-day chart. It's laying right on it, hasn't passed through it. Now, we've talked about this before. What's interesting is our 50-period moving average line. It's a gray line on our charts. Seems to be a stopping point. It's so far stopped that upward movement. So we'll pay attention to that and see just how hard a resistance that is and how much it really bounces off. Derivative oscillators continue to gain a little energy. Price percent oscillator almost flat, still heading up a little bit. We look at the 4-hour chart and we see, of course, it crossed over in the afternoon going down and is pushing through the two-day trend line. So keep your eye on things. We don't have a trade on that down move yet because the two-day chart is still up. So we'll continue to watch, wait, and be patient. We trade when the charts tell us to trade. Now let's look at the Qs. It was down 1.53%. Some strong down movement. Nonetheless, there was an up week, a green up candle, but with a long wick on top, of course, showing us how much the bears were able to drag that price movement down. And the prior week, we had a green spinning top, which again connotates typically for us indecision tending up, and of course it was for the entire week. We look at the two-day chart on the Qs. We see that we had a crossover going up on the 18th on the two-day chart, and then a spinning red top there to end the week. Derivative oscillator is going up. Price percent oscillator, our key main indicator, is flat. On the 4-hour chart in the afternoon, we also had that crossover going down. So that is indeed interesting. Again, Stuff we've been playing with on the 2-hour chart, that 4-hour chart. We look at the 2-hour chart and we were able to actually chart where a lot of that momentum ended, and it really ended at the intersection of the two purple lines that we were tracking, the price percent oscillator. So again, just watching where that movement occurs and how accurate that was. So again, we're always experimenting, trying new things, looking for new ways to be more accurate in what we chart. Remember, the bottom line in what we do, it's to make money. In our case, of course, virtual money. We're not a stock calling service. We're an education firm. We want you to practice with us. Use your trade worksheets. Practice until you get perfect, and then you can make up your own mind what to do with your own real money. Okay, moving to TLT 20-year bonds, we see that we ended the week with a red down candle, wicks on top and bottom. Didn't cross over going down, so still in a confirmed up move, but blown through the 2-day and the weekly trend line. And we see that the derivative oscillator is losing upward momentum, price percent oscillator headed down. We look at the 2-day chart, and we did end up with this latest candle actually with a down move. So we can actually confirmed down. So we'll move our 2-day trend line over and confirm that down move on it. And the beautiful thing about freestockcharts.com and TC2000 is how easy it is to use and how utterly simple and accurate it is for us. And as we go, we see that the price percent oscillator is crossing over, going down. Derivative oscillator also flipped at the same time. And that is always a good sign. I'm sorry, derivative oscillator crossing, price percent oscillator flipping over. And as we look at the 4-hour chart, what do we see going on? Of course, it peaked out back on the 17th in the afternoon, and then continued to move down strongly and away. And again, we'll just continue to watch things and see what we see as the week continues to develop. Remember, we still have a confirmed up move on TLT. We don't have a trade on that, but we realize that until we have a crossover going down on the price percent oscillator, we still stick with where that prior crossover occurred. So we'll continue to watch, wait, and be patient. Okay, from the TLT, the 20-year bonds, to our last chart, gold. What do we see going on there? Well, remember yesterday when gold looked like it might be crossing over, going up, and what did it do? It pulled back. It reined in and rolled over, going down. And of course, we have a down week in gold. Well, we say down week. It is not a solid red down candle. It is an open box red. So we see a big pullback there in gold. We see a long wick on top, all that energy lost, and a bit of a wick on the bottom. We see the price percent oscillator headed down, derivative oscillator headed down. Remember, gold is still in a confirmed down move on the weekly chart, just hasn't been able to get that momentum to cross going up. 2-day chart, not crossed over going down yet, but getting pretty darn close. And of course, it's since blown through the 2-day trend line. We could try to draw another trend line, maybe a little bit closer, but price movement has closed below that. Derivative oscillator is losing momentum. Price percent oscillator headed down. 4-hour chart shows us that crossed over in the morning on Thursday, the 19th, going down, and that down movement has continued through Friday, again down 0.79%. So hopefully at some point the oscillation will get more stable in gold, and we maybe can go back to using the 4-hour chart as a total trading chart, but it's not been working over the last many weeks. So wonderful last year and the year before. All of you have been with us a while. Remember how that was a total trading chart. Folks, that's where we are as we end the week and go into the new week, beginning Monday, the 23rd of April. We so appreciate you being with us. Please pre-order our book, Charting Your Way to Wealth. You can go to the website. We have it under all the daily market reviews, links to that, and also at the YouTube channel. And those of you receiving our daily market reviews and our comprehensive review and forecast via email means you're a subscriber. You can see it in the notes that come with your email. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.